We think Ethereum is going to trade much higher. And so we're very bullish. It is the applications of the blockchain, and it has many more scientists, many more engineers and coders that are involved in the ecosystem of Ethereum, because it's the backbone for DeFi, for music, for sports. It's the backbone for NFTs. It's the backbone for stablecoins. So as these other apps grow, the demand and need for Ethereum grows. It has the growth potential. And then as they grow, the need and the demand for Ethereum grows. We've not put our coins up when Ethereum 2.0 came in December, because we believe that Ethereum 2.0 is the first initiatives are only going to suck up supply. Metcalfe's law says if you limit supply and demand grows, it grows exponentially. So that's what we've seen the past year with Bitcoin. The supply every 10 minutes is halved from the previous 4 years, and it's going to have in 3 years from now. And that means there's going to be tighter restrictions of supply. It's capped at 21 million coins for Bitcoin, and demand is growing. PayPal allows you to buy fractions of it. And so what we're seeing is a clear sea change in the sort of global decentralized mechanism for alternative asset classes. Well, it's more expensive when you do mining. The validation process, as you know, uses energy, and it uses expensive hardware and software. So the idea was to just use nothing but software, but the risk is it gets hacked. And so that's always been the great concern of going to proof of stake. And so this proof of work, which we do, we believe, based on our research, our intelligence, it's going to be around for the next several years. So it's not going to vaporize. But one of the other interesting parts we're looking at is high performance computing. If you see Amazon and Wall Street Journal just covered a story that they're scrambling to get green energy themselves, but they're mega players, and the cost, if you want to go and use for Amazon's cloud service using AI, it's more profitable than crypto mining. It's very expensive. So us having the expertise in mining Ethereum and using GPU chips gives us the strategic ability to pivot when proof of stake actually becomes much more dominant, and that all of a sudden we'll be in high performance computing and data centers. And our goal is to have small data centers around the world using only green energy. I think it's going to take probably 2 to 3 years. Ethereum has been a better producer. I mean, it's like buying silver and gold. In a bull market, silver far outperforms gold. Sure. Ethereum far outperforms Bitcoin. I think they're two different parts. You know, that when you look at Bitcoin, it's like buying Andy Warhol art. It's art, and there's a limited supply of it. So it's going to have its own DNA of growth and volatility, and Ethereum is going to become different because it's the apps, it's the backbone to the blockchain network. So they're two different parts, but they're both digital money. I think what's important for investors is that they should have about 2% in that space. Like I've always advocated 10% in gold and silver. It just shows you, look at the past decade, gold is much more stable in volatility compared to Bitcoin and Ethereum. Bitcoin, Ethereum is the daily volatility is 6 times greater than gold. So if you're doing diversified portfolio and asset allocation, gold is a much more stable asset to recalibrate, and it's outperformed the S&P this century, the past 21 years, by 250%. So gold is not going to disappear as an asset class. The alternative asset classes, and what you're seeing more and more institutions become interested, is going to be Bitcoin, Ethereum.